So firstly, James, thank you so very much for your time doing this episode. Really appreciate you talking to me and sharing your knowledge and your information regarding on-chain analyst. Because when you talk about UTXO and on-chain analyst, you're definitely a specialist, along with you, Glassnodes as well, which is a leading blockchain data and intelligence platform. So really appreciate you talking to me, man. Really, really thank you for doing this.
Thanks, mate. It's a pleasure to be here.
Now, before we start, just wanted to check, how has your day been so far? And is there anything interesting planned this particular week?
No, it's been fantastic, actually. No, I'm just tapping away. I'm actually doing a bit of a bull case and a bear case for Bitcoin because one of my theses is that as the market trades sideways, people's confidence that we're going to stay here goes up. And when it moves, right? If you wake up tomorrow and Bitcoin's at 80,000, or you wake up and it's at 40,000, in both of those scenarios, people are going to go, whoa, what happened? So essentially what I like to do is try and just plan a couple of months ahead and say, well, here's the two different cases. So that's what I'm working on at the moment.
Yeah, and if I'm not mistaken, today there was this news out that Australian exchange is planning to launch or approve a spot Bitcoin ETF as well, isn't it?
Yes, I believe so. There's an Australian one coming. I believe the Hong Kong ones actually will probably be going live about the same. Pretty much as we're talking. So that's going to be happening. Although I suspect that most of these will be much smaller than the US ones, but nevertheless, they're all vectors for new demand.
For our listeners in Dubai and in the MENA region, can you give a quick background about yourself? Because if I'm not mistaken, you did actually get introduced to shitcoin first, and then later on you went into the Bitcoin rabbit hole, isn't it?
Yeah, correct. I mean, as everybody does, right? You come in and you're all starry-eyed and you want to make some money. So, I got into the market back in late 2017, bought the absolute top, and I did not hang on to those coins, I can assure you. And so my background was civil engineering. I used to design tunnels, mines, basements, so anything to do with the ground, and became very, very familiar with risk and probability, but also using engineering design. So, trying to look for what is actually moving the market. People can obviously get, stuck on focusing on small details, but if you could do a quick back of the envelope calculation and show, well, this factor doesn't really change anything. It's like, it's very small. Don't worry about spending too many compute cycles on it. So I found Bitcoin really late 2018, and that's about the time when on-chain analysis started to come. The first metrics, the realized cap came out in December. There was a bit of a gold rush of myself and others kind of running around trying to find all these new metrics and think of these new primitives. And, I was downloading all the PDFs and reading them on planes as I was flying around. And, all my friends thought I was insane, but I could just see how this data, you could visualize what was going on in the market. And I think I started educating people on-chain in 2019 and have essentially been doing that and studying it ever since.
And am I right in saying during that time there was Plan B as well, isn't it?
Yeah, so he would have started to emerge in 2018. That's when the stock to flow, I think 2018 or 19 is when the stock to flow model was originally written. I don't personally have a great deal of time for the stock to flow model, but it definitely had its role in the 2021 cycle, that is for sure.
Definitely agree. Now, one question which I wanted to ask regarding your civil engineering background, are there any competencies, James, that you tend to incorporate from your civil engineering background onto, let's say, your Bitcoin analysis work? The reason I want to ask this is because I do have another podcast where I talk about sports, that is endurance, like Spartan race and obstacle course race. I've interviewed 11 world champions. 10 of them are mechanical engineers. So there's something unique about engineering, probably the way they think, the way they look at interpreting data. So what are some of the competencies that you've incorporated from your civil engineering background into Bitcoin analysis?
That's a great question. I think the first one is I became fascinated with markets, and it was the mechanics of it, right? Here's the thing, right? Human beings, generally speaking, are not very good at surviving in markets. We tend to buy the top and we sell the bottom until you've developed that experience. Now, if I think about that from an engineering principle, I don't have all the finance background. So I haven't been trained to think in like classical economics. So I look at the economy and markets like a machine. So when I think, okay, what's going to create a bear market? What does the top look like? Well, it's going to be when lots and lots of people buy too many coins at too high of a price. That's the mechanics that creates tops, whether local or global. So then with on-chain data, I'm like, okay, now I'm going to go and look and see, how do I find when too many people buy too many coins? And then you study the mechanical factor of how did we get here? It's the profit taking on the way up that establishes the top. It's the people panic selling in a loss on the way down. So looking for those transition points. So in many ways, it's just about mechanism design. So I think that's where the engineering side comes in. I think the one other component is just being able to do quick back of the envelope calculations, not spending too much time on stuff that moves 1%, and really focusing on the things that move 90%. Because if you solve them, everything else you can deal with simple assumptions and rounding errors.
That is an absolutely excellent answer. And this is one of the beauties of Bitcoin, isn't it? Because the transactions are completely open source. And we'll definitely delve into UTXO, which I think you're kind of like a specialist in that. Now, James, before we get into that, I do listen to a lot of podcasts. And you've been on the What Bitcoin show quite a lot of time. You've been on Why Bitcoin and Stephen Levara podcast as well. Now, I want to ask this very specific question. I'm going to start doing this in future as well. How would you define Bitcoin? What is your definition of Bitcoin?
That's a great question. It doesn't really have a definition. It really is individual. So for me, I think Bitcoin is, in many ways, it's a mechanism for storing our time. So, when I think about what money is supposed to be, or a monetary asset, you trade your time, which is your scarcest resource, because we only have a limited amount of it and you can't get it back. We trade our time for something, and that could be for a job, that could be for a pleasure, it could be for travel, whatever it is, for your family and friends, but you allocate your time. Now, in the world of fiat currency, if I allocate my time to a career and I earn money, and someone else can just print more units of it, and if they're effectively stealing my time. So Bitcoin, you can't do that. So in that way, it's a storage of your past time that you don't want to spend right now, but you're going to need later on. So I've always thought that's kind of the more philosophical and kind of left of field, but it's not an overly unique take, but that's certainly where I view it.
No, I absolutely love this explanation. And later on, what I want to do is when you talk about inscription and runes, we'll definitely have a look at, how the definition merges with that. Now, let's talk about Glassnodes. Can you tell our listeners, particularly from the MENA region and UAE in particular, what is Glassnodes, and just brief information about the team?
For sure. So Glassnode is a data provider. So what we've really specialized in is extracting all of the information. At the end of the day, Bitcoin and blockchains in general, they're a database. And within that database is all the information of who held what coins, where did they send them, how long did they hold them for, did they realize a profit or a loss? So within all of that information, you can start to extract market signals. So for example, let's imagine that we can see during a bull market, lots and lots of people who held their coins for a long time. They bought in the bear market, they've held for 2 years, they're very, very up on their position. You'd probably want to know when they all start spending and taking profits at the same time, right? Seeing coins flowing into an exchange. Glassnode tools allows us to see this because we can essentially track the timestamp when a coin was acquired or disposed of, the price stamp, what was the price, and then when they sold it, profit or loss, and where are they going? Are they going into their own wallet, into exchanges? And when you aggregate all this information, you can start to divulge some really interesting market-based information, right? I like to say it's like Bitcoin giving us a quarterly report every 10 minutes. Now, so the team at Glassnode, we have a whole bunch of different sectors, but my team are the analysts. In many ways, we're kind of the most professional users. We've used Glassnode products. We show people how to use the product and how to actually use the data and interpret it and turn it into actionable information. We've got a data science team who's then actually going in and like extracting that information in the first place, who we have a lot of feedback with. And then all of the other teams who are, essentially building out the front end, building out the back end, obviously business ops. So that's kind of the structure of it. But, it's a great team over there. And, some really, really interesting metrics and tools have come out I've been there for about 3.5 years. And some just incredible work that we've done year to date. And to be honest, for Bitcoin especially, we have to be best in class. There's just not many other companies, I think, come close in terms of the level of depth, the complexity, but also our ability to simplify things, right? And take those complex ideas, but deliver them in a relatively simple format.
And it definitely helps traders as well, isn't it? I mean, what I used to do when ChatGPT was out, I used to literally copy paste information from Glassnodes. I used to take it from CoinShares as well. Show me the magic number. Let me see what kind of predictions I get. Now, how can Glassnodes, let's say, help traders or let's say high net worthy individuals, which are quite a lot in Dubai right now? How can they benefit from what Glassnodes is offering?
For sure. So I think the way I like to describe on-chain data in general, which is obviously what Glassnode specializes in, it is that we kind of have X-ray vision. So if you imagine markets are a bit of a poker table, right? Everyone's placing their bets, trying to win. What if you could see 30, 40, 50% of everyone else's cards? you may not have all the information, but you've got a lot more information than the other guys. And in my experience, we're still very early in even just like traditional finance and hedge funds starting to click and go, hang on a second, you're telling me I can get data about what everyone's doing every 10 minutes? We're still very early in that process. So a lot of people are like, oh, it's public information, therefore it's all priced in. I can absolutely assure you, having sat with many, many clients, having studied this for 3.5 years, there's no way this stuff is priced in because we see these patterns playing out all the time. So you want to see when the not so smart money buy high. You want to see when those same people sell low. And conversely, you want to see when the smart money start doing things in, out, when a different entity is active or not. You combine the on-chain side with the derivative side because that's another component. So we have so much data. The challenge is obviously processing it and finding out what is actually important. But, from our experience, some of the tools we've got at Glassnode are just super powerful. We can see people selling high. We can see them then capitulating at the lows. You can get all these little micro factors. It's really cool.
Now, regarding processing of data, now, am I right in saying, James, that the weekly insight that Glassnode provides on its website, it used to be done every Mondays before, but now it has changed to Tuesdays. Am I right in
Yeah,
saying
we
that?
shifted to Tuesdays. And the main reason, so the analyst team, we've actually got, so myself in Australia, we've got someone in the UK, we've got someone
Okay.
in Canada, and someone in Berlin. So it's kind of 3 corners of the globe. And releasing on Monday meant that some of us were working over weekends, and that's, to me, I'm like, guys, let's just move it to Tuesday.
The other question what I wanted to ask is, James, does it take data only till, let's say, Friday? Because there's quite a lot of things that do actually happen over the weekend, isn't it?
Oh, yes.
Because I did look at it, if I'm not mistaken, just 3 weeks ago. I was looking at it, and there is something which did actually happen on Saturdays and Sundays, and that was the CPI numbers were out. So how can
Yeah.
listeners be aware about those factors as well? Because there's 3 days, which is quite a lot.
It's a balance. Yeah, no.
Yeah.
So a lot of the work and the thinking and the stuff we do is earlier in the week.
Mhm.
Most of the time, we generally are okay. We try to structure it so it's not, this is the newsletter of the week on chain that we do. We generally structure it so it's not going to be too sensitive, but there's been many a time when the market has just exploded higher or lower. And the article that we wrote, as great as it was, we're like, oh, we've just got to park that. Maybe we can pick it up next week because it's more fundamental based.
Yeah.
And that's the other thing, right? So volatility creates, what would you call it? It creates content, right? When something happens, there's an opportunity for us to explore what it looked like going in and then what it looks like coming out the other side. And talking about these traders, what we're trying to do is, having spent a lot of time with this data, we've become quite good at knowing what tools to look at the right time. And what we're doing is giving people ideas and saying, hey, see this big candle that rallied up or sold down? Here's the lead in. Here's what happened afterwards, kind of drawing the lines and saying, this is a way to think about this kind of data, how to use it. So next time we see this pattern going in, maybe this is what the outcome will be. Now, there's been some times where like events have happened and we've got to completely rewrite it. But for the most part, we generally structure it in a way that we're flexible when these things happen.
Now, earlier on, before recording this episode, we discussed about the things that are actually taking place in Australia and Hong Kong. So how is the UTXO model looking today? And hopefully tomorrow, because tomorrow, Jerome Powell will be making a decision regarding the interest rate hike as well. So can you tell us today and tomorrow, that is 30th and 1st of May, what is the matrix looking at? Is it giving some positive indication or is it giving not a good indication?
No, it's a great question. That's why I'm actually writing a bull case and a bear case as we speak, which I'll be publishing this week. So the bull case, if I just really summarize it, we've seen an extraordinary amount of sell side pressure. GBTC has unloaded over 300,000 Bitcoin. We've seen just long-term holders, excluding GBTC, unload another 900,000. So that's 1.2 million Bitcoin at elevated prices. We've seen, generally speaking, it's been net selling. So if we just kind of look across a lot of metrics, the ETFs have slowed down their demand. That's not ideal. That's a bit more bearish. But the amount of sell side that's happened has been massive. And we've only had a 20% correction since FTX blew up, which is incredible to me. So when I look at the bull case, many of our metrics have reset. Things like short-term spending and supply and profit and loss, all these things have cooled down quite a bit. So there's no question at that 73K peak, things were pretty hot. And in many of the indicators that we typically look at, reach levels that are like, okay, a correction or a resistance here makes perfect sense. We've then had that play out. And what we're looking for is a cool down. And we've actually seen a really healthy cool down. Derivatives have flushed out. Generally speaking, it actually looks really healthy. But you also mentioned the macro side of the equation. We're seeing rumblings in the Japanese yen market, right? That's devaluing at a very rapid clip. As you mentioned, you've got interest rates. We've got kind of geopolitical tensions. So there's all of those components. And I think if the stock market was to fall over, I don't think Bitcoin would be immune from that. So these are all, let's put them in the bucket of political uncertainties, very hard to kind of read and gauge. If we just look at internal within Bitcoin, it is amazing to me that we haven't had more than a 20% correction. Very typically, we get 25, 30, right, in a bull market. So having only had 20 with so many coins getting sold, it feels very robust. The bear case, on the other hand, is that if we get down below about 58,000, 59, 58, we will trade below what we call the short-term holder cost basis. Now, if we get to those levels, we start to move into a regime where I call it top heavy. I mentioned before, too many guys having bought too many coins at too high of a price. A lot of them are down there at that 60,000, 58,000 zone. If we trade below that level, it could be a bit of a micro cascade. We may actually see people start to panic. So that would be a level to pay attention to and watch. But outside of that, things look extremely resilient. So it's, you're always got to have both sides in play. Looks healthy by and large, but keeping that other side just in mind.
And recently, we also had the Bitcoin halving as well.
Yes.
And earlier while researching for this podcast, I did actually watch your interview with Pepperstone. And, you put up a chart which talked about, the issuance, the impact of halving, that is the miners' issuance. It is 850x smaller than futures volume, 200x smaller than spot volume. So it looks like, not at least for now, at least in the longer duration, we might be heading towards a bullish market, isn't it?
Yeah, and look, the halving is going to remove at current prices like $35 million a day, which is non-trivial, right? That's meaningful sell side. What I was doing in that chart was just kind of putting things into perspective. Now, it is a fair critique to say that trade volume is in both directions. But even if you were to 10x the halving, you're still talking about like 1% of what's going on. So I mentioned before, like, where does my engineering kind of skill set come in? To me, it's so small that it just kind of fades into the background. Yes, it's going to be net positive, but I'm not going to be moving mountains in my analysis to be like, I have to factor in the halving. The market will just factor it in for me, and that's just kind of part of the mechanics.
Yeah. And the report that you said, that you're preparing, will it be out later on in this week, or is there
there'll be one out on Wednesday, and then I'll do the bear case on Friday, will be my structure.
Okay, perfect. That's absolutely wicked. Now, on the website, there is a report called as a guide to the crypto market, a joint publication with Coinbase, Institutional, and Glassnode. Can you give our listeners a summary of what that report contains, and how can, let's say, investors equip with a deep understanding regarding that from a cryptocurrency market point of view?
Yep. So really what we focus on, this is actually not too dissimilar to Glassnode's general structures. We typically focus on where the most of the capital is. Now, if you look at Bitcoin plus Ethereum, and then you look at it across spot, derivatives, any of the different market sectors, and stablecoin, you've got 75% of all capital in the crypto market. So we generally focus on stablecoins, Bitcoin, and Ethereum, because that's where you're capturing 75%. Now, what we do in that report with Coinbase, it's really, as I mentioned before, a lot of institutions and hedge funds and they're still very, very early in their journey in coming into this industry. There's a lot of jargon. I've probably said a bunch of words in this podcast that people are like, I don't even know what that word means. So there's a lot of jargon in the industry, particularly around the data. So what we were doing with Coinbase is actually structuring up a report that just helps people go, here's Bitcoin, here's the type of metrics that we generally look at to understand it. Here's Ethereum, likewise. Let's look at derivatives markets, futures and options, because they're a massive part of market structure. And then stablecoins, because stablecoins are one of the biggest element, $132 billion worth. So very, very significant in size. And really, they're the four pillars. If you can get your head around those four pillars, generally speaking, it's a great way to just onboard these institutions into how to think about data in this industry.
Yeah, stablecoins, they always dominate the cryptocurrency market volume, isn't it?
They're massive.
Yeah, absolutely massive. And you have Tether USDT, which is accounting for a majority of the chunk. Lately, we have new stablecoin issuers as well, that is FDUSD. They're heavily competing with Circle USDC as well. Now, keeping all these things in mind, James, I want to ask, how does Glassnode ensure the accuracy and even the reliability of data it provides? Because, the cryptocurrency market is extremely volatile. Do you take data directly from on-chain, or how does it work?
It's a combination of things. So
Mhm.
what we essentially do, so we've got our nodes running. So we actually do extract and pass information. There's a few different types of data that we extract. So let me just talk you through the process, and I'll talk you through the two
Mhm.
different types. Um, we've got our data science team. They will extract the data from the node and then process it. Now, that will go through obviously building it into data tables and doing all that filtering. The next layer is building what we call heuristics. So let's, for example, say that there's Binance, and we study the way that Binance handles their internals, deposits. They go into their cold wallet, goes into their hot wallet, blah, blah, blah. Coinbase will have their own, every exchange has got their own structure of how they do this. And what we do is we build heuristics and say, this is Binance's pattern. What we then do is we've built an algorithm that then goes and finds, this is the Binance pattern, go and find more of those. And once it's gone out and found these things, we then cluster and say, yes, that's Binance. No, that's this, that's this. So it's essentially a combination of data science work, feeding an algorithm, which then feeds the data science, and they kind of iterate off each other. Now, when you run that experiment for a couple of years, as we've done at Glassnode, the algorithm gets pretty good. And if you remember when FTX blew up, there was all the proof of reserves, right? All the exchanges were giving out their proof of reserves. We obviously take that because we're like, okay, now this is very confirmed that it's Binance. We plugged it in. The algorithm said, yep, I found that, 2 years ago. So we actually had most of those wallets already captured. So talking about those two data sets I mentioned before, if you just measure from the blockchain itself, you will have a lot of noise. So for example, if you're trying to trade these markets, you don't really care that Binance is moving coins around internally. And just as a bit of a reference, deposits, withdrawals, and internal exchanges, just stuff going on with exchanges, about 50% of the Bitcoin blockchain. So
Mhm.
it's a huge consumer of block space and transaction volume. But a lot of that you don't really care about. It's not market, it's not economical, it's not someone buying or selling. So if you filter that data, that's what we call mutable data, because what we're doing is we're taking out Binance, we're taking out Coinbase. But the challenge is that sometimes the data can change just a little bit here and there. And that's because we find a new wallet or we find a new thing over here. So for traders, it can be a little bit more difficult to backtest. And we do have solutions for that as well. Having recognized this problem, we built a whole solution that really helps these guys backtest and things like that. It's a bit technical. But then you've also got just the raw data. Now, with a lot of our metrics particularly ones that I really like, ones that look at profit and loss, because at the end of the day, why do you and I do stuff in the market? Profit and loss, we're driven by incentives. A lot of those metrics actually self-correct, because if you deposit a coin, you lock in a profit. Binance may go and consolidate it, but it's consolidating it at a very similar price to when you deposited. So it's kind of the 1% versus your initial deposit, which was the 90%, 99. So in many ways, the raw data, we actually just shipped a new batch of metrics that is all of like me and my team, the stuff that we absolutely love using, the stuff that we usually will show clients if they're interested in trading and systematic work. We essentially show them these types of metrics, and now we have them down to 10-minute resolution, and they never change. They're immutable. And the really cool stuff about this is you can actually see people buying high, selling low, buying high, selling low. So you can see all these internals. It's fascinating stuff.
And you do that with decentralized exchanges as well, isn't it? Or just centralized exchanges?
Yeah, so we've labeled, when most of our work is labeling the centralized exchanges. The decentralized ones we can just pull straight from the node itself because we can see
Okay.
the Uniswap smart contract.
Yeah.
So our DeFi offerings are expanding as we speak, so that those ones are actually much easier to track because they're all on chain.
Yeah, that becomes much more better as well. Now, from a business point of view, what are the common challenges you face in convincing, let's say, potential clients of the value that Glassnode's data analytical services provide? Because
Yeah, no,
these, as you mentioned, these are a couple of jargons as well, isn't it?
absolutely. No, I mean, so first things first is finding. So clients need to actually find out that on-chain data even exists,
Yeah,
which is a big reason why we do the newsletter, because it helps just show off and say, hey, here's some really cool stuff that we can find with this data. It will expand as more and more clients start to come into the market. So there's still like the growth phase of institutions coming in the first place. There's also different types of traders. So some people will prefer to do systematic work. And because there is a lot of jargon, it is new data. It's a double-edged sword. there's a lot of work, right? People have to come up to speed. I mean, I've been in this industry for 6 years now. It's only been around for 6 years, really. So there's not many people who've been around longer than I have. You can't expect clients to be at the same level, right? So
Yeah.
there's a process of us explaining and helping like on board and bring them along, but there's work. There is definitely work involved in getting there. And then there's the other side of just feeding it into a machine and seeing what comes out. So it's all about different ideas, different mechanics. It comes down to, as with all these types of things, there's a jargon barrier, there's a proof of work barrier. So I think all these things get solved in time, but that's really what the analyst team is doing, and just
Yeah.
showing people ideas. Here's how to think about this data and really get you started.
Yeah, and in countries like UAE and the Saudi Arabia, there's always this cultural barrier as well. So you
Yes.
need to overcoming those things. Now, James, you do a lot of on-chain data analysis on Bitcoin, and doing technical analysis on-chain does actually also show the psychological behavior of people, right? So can you elaborate what kind of psychological behavior does this on-chain analysis show?
Yeah, I love this angle. So, in many ways, why does technical analysis work? And more kind of probably a better example is, why can we look at price charts from like the 1920s and it looks exactly the same as today? It's because human beings haven't changed. Our brains and the way that we're emotionally wired is, million-year-old hardware. It hasn't changed in that whole time. So markets create this, like, I don't know what you call it. Market psychology is well studied. People generally like to avoid risk, and them trying to avoid risk results in two things. They don't buy. This is kind of the less experienced investor. They don't buy until it feels comfortable. Now, when does it feel comfortable? Well, when everybody else is buying and it's going up and you're like, oh, I'm going to do what everyone else is doing. Feels very comfortable and very safe. But generally speaking, that's the exact wrong time to do it. So if we take that, and how would I see that in the on-chain world? Well, who are they buying from? I want to look at the seller, and the seller is going to be some guy that bought his coin 2 years ago, knows what's going on, and goes, no, that's way too high. I'm taking profits. So you can see that the profit taking goes from an experienced long-term investor to an inexperienced brand new investor. He locks in a profit. Some other guy's now got a very high cost basis. And we start looking and saying, well, there's a lot of people who now have a very high cost basis, and all you need is price to drop below. And then they go, oh no. And then they don't
Yeah.
feel so comfortable and safe anymore. And what generally happens, and I'm sure everyone who's traded has gone through this experience, you buy, the market feels like it immediately sells off. Literally, you've just hit buy, and then the market just trades down, and you'll hold it. And you're like, no, it'll come back. It'll come back. It'll come back. And you go, I'm done. I'm out. And you sell. And then, of course, it rips right back up to your cost basis, goes exactly to where you bought it the first time. You're like, oh, man, I was wrong. So you buy, and then it goes down again. That is what we're looking for. So you're looking for, now that inexperienced guy has bought high, let's watch him. There he is. He sold everything at the bottom. There's your contrarian signal. So that's the way that we like to look at it, right? It's all about looking for, which cross-section of the market do you care about? Do you want to see their profit taking or their loss taking? Do you want to see how long they held it? All these different factors, these different ways to slice it, and then look for the mechanics that drive the market. And they're all there. It's the process of finding the ones that work for your strategy and ideas.
And based on your experience, James, has there been any market sentiment or psychological behavior that has completely taken you off guard and you did not expect this thing to work, but the market or people's buying behavior or spending behavior has completely baffled you? Are there any specific situations as such?
The one that actually got me, so in 2021, there was two big lessons that I took away from that. The first one is that, and because I joined Glassnode in February 2021, and at this point in time, GBTC was seeing all of those inflows, and the argument was on-chain data is not going to be very useful because all the trading happens in futures and exchanges. And I was like, okay, I'm going to go into this cycle. I mean, I believe that on-chain data is super powerful. I'm going to go into this cycle expecting these models to break. And where it actually burnt me was in the second high in 2021. So on that second rally, and I only in post-study did I kind of learn these things, because we've got to remember, this is actually the first bull market where we actually have all the tools and the knowledge to actually read any of this stuff.
Yeah.
Back in 2021, it was so new. No one knew what any of this stuff does. In fact, my job was to work out. We've got all these metrics, but no one knows what they do. So my job was to work out what they do. Now, in that second peak, as we were rallying through September and into October, I was looking at things like transaction counts, active addresses, transaction volumes, and I was just looking at going, you know what? There's just, it's a lower high. It doesn't look like there's any follow through. So yeah, we're at an all-time high. It doesn't look like, it feels like a bear market. It looks like a collapse that we see in a bear market. And following this, right, by about December or January, we released a report called Sizing Up a Bitcoin Bear. And in January 2022, most people were still being like, oh, it's just a correction, we're going back. And we were like, no, I don't think so. I think this is a much nastier. I mean, we were willing to put out a report called Sizing Up a Bitcoin Bear at like 45,000. That's when we were very confident that things weren't right. So my lesson from all of this is I went into the cycle assuming that on-chain data was going to break. And then when I saw it, something that didn't look right, I went against my judgment and said, no, I must be wrong. The on-chain data must be wrong. And we're going to keep mooning. But of course, it was actually telling me the exact story. And what I shouldn't have done is trusted everybody else. I should have trusted my own instinct and my own gut and said, no, this doesn't look right. Something's wrong, and investigated that further. So that was my big lesson from 2021. But very, very interesting how those lower highs, and they're across so many different things. And having now studied it, we can now rationalize why they are.
That is absolutely interesting. Now, James, you were on the Stephen Levara podcast, and he asked you a very specific question about, on-chain analyst, and he compared that to, snake oil salesman. Now, you did have a really interesting answer where you talked about, fear, greed, profit and loss. Now, I'd like to ask the same question once again, and how much of Glassnode's analysis is real?
Yeah, absolutely. I mean, I get this all the time, right?
Yeah.
That they look at it, it's like, oh, it's astrology for men. It's just all voodoo.
Yeah.
And I'm like, okay, no, that's fair enough. I get it. But then let's just bring it back to any kind of analysis. How many charts, when you're scrolling down Twitter or anything else, how many times do you see a trading view chart and you never ever go back and follow up and be like, well, he was actually dead wrong? There's heaps of them. Now, the problem with on-chain data is the same as the problem with technical analysis, which is also the same as the problem with investing in general, is that most people aren't very good at it. That's the main problem. And there are good analysts and bad analysts. And obviously there's a learning curve in all this stuff. I'm not going to pretend that I'm a technical analyst. I understand the mechanics. I understand how it works. And I understand the tools. But if you sat me down next to a professional technical analyst, I guarantee you he's going to do a better job than I am. And I would say the exact same for on-chain. I think if there'd be very few people in the world who've probably spent more time studying on-chain data than myself. Now, that doesn't mean I get everything perfectly right, but I get it probably more right than the average guy off the street. So, yeah, it can be snake oil in the hands of somebody who isn't very good at it and is very good at convincing people, but so can anything. So I think that's probably the right answer for this, is that it's snake oil depending on whose hands it's in. It's more snake oil in the hands of a snake oil salesman. If you've got someone who really knows what they're doing with any profession, then, it all comes down to that game of proficiency.
And you have competitors like Chainalysis, Dune Analytics, and even Merkle Science. So how does, let's say, Glassnode differentiate its on-chain analysis from them?
It's a great question. And actually, I think really if I nail it down, there's two major differentiators. The first one with Glassnode is that we have I can't even think of a competitor who's close in terms of our Bitcoin expertise. We are just we're a different ballpark to everyone else when it comes to Bitcoin. We're much more competitive on a kind of more equal footing across Ethereum and stable coins and things like that. But our Bitcoin, there's very, very few companies who are even close to us. That comes down to a whole bunch of things. There's just our on-chain experience, which is kind of what me and the analysts have done. There's the algorithms and all the just brilliant stuff that our data science team has done to actually cluster up theyese addresses. So they're kind of that's moat number one, I would say. And the other one is actually our specialization with traders. So because we've spent so long understanding profit and loss, with understanding what these tools actually do from a very mechanical level. And as I mentioned, we just shipped a bunch of metrics that take all of our favorite stuff down to 10-minute resolution, block by block. Now we can see microstructure. And what this is great for is traders. So really, I think where a lot of our competitors have gone down very broad, right? You can see transaction counts, you can see volume on a DEX. It's very useful if you're doing a research paper on Uniswap. It's not very useful if you really want to actually systematically trade this stuff. If you want to be in the weeds, actually making some kind of systematic trading strategy or quant strategy, that's really where Glassnode kicks ass, because we've spent the time to understand the mechanics. We've spent the time actually studying it, and we've got 3.5 years of reports every single week to prove that we kind of know what we're talking about. And now we've turned that into a package that's designed for traders and people via API. So really, that's where I see those two, our Bitcoin data and definitely our focus on traders. Those two are where we, I think we really have where we shine.
And last week, on my podcast, I did actually talk about a company called Hacken. They're more of an auditor firm, but I think so, based on the news, they're getting into on-chain analysis for Bitcoin, and they have actually had a partnership with Abu Dhabi Global Market, with this ADGM, which is an absolutely massive one. So hopefully, Glassnode possibly tries to compete with them. And in Dubai, we have Dubai Virtual Asset Regulatory Authority. Maybe some kind of partnership with them. That'll be absolutely wicked and wild as well. Now,
Competition is
James,
always good.
absolutely, as long as the competition is healthy, it is definitely great.
Absolutely.
Now, James, you are on the Why Bitcoin show as well, and you mentioned a very specific book going back to almost 100 years, that is in 1923, the book called Reminiscence of Stock Operator, that actually discusses how emotions drive sentiment. So can you tell our listeners a bit about this? Because I'm pretty much sure, our listeners will definitely benefit by it. And based on your on-chain data analysis, how do long-term holders and short-term holders display these emotional sentiments as well?
Yeah, absolutely. So this is a book that was written by a guy called Edwin Lafair, but people believe it's the pseudonym for Jesse Livermore, who's was one of the greatest traders of all time, right? Made millions and billions during the 1920s and earlier. He made a relatively unfortunate end, but this book, Reminiscence of a Stock Operator, first things first, it's just a really good read. If you're interested in markets, basically, and I've read several like Trading in the Zone and various other books that are about trading psychology, because trading is a hard business. You really have to train yourself to put your emotions in a box and look at things very objectively. It's a hard job. And in a very kind of humorous, narrative-driven way, this book, Reminiscence of a Stock Operator, it describes what it's like to live, trade, win, go bust, win big, lose even more through the 1920s. And most of these trading textbooks and just books about how you can kind of become a better trader, once you read Reminiscence of a Stock Operator, you're just like, oh, they're just all derivatives. So this guy was so in tune with what it's like to be an investor or a trader back when they're like literally physically reading tape prices. So he got it right. He understood it. And everything else is kind of a derivative of that. Now, a lot of those ideas and concepts I then bring in and say, well, okay, if human beings behave in these ways, how do we find it? How do we visualize it? And that's where all the profit and loss and stuff that I was talking about before, let's find the naive guy who's just bought Bitcoin for the first time. Let's find when there's a whole bunch of them buying at the same time. I want to see that. And I want to see when they're being sold to by someone who's much smarter, wiser, and been around a lot more. Show me when they're the seller and they're the buyer. And then show me when they're the seller and they're the buyer. So they're your different combinations. If I'm a contrarian, I want to be fading events when lots of inexperienced investors are buying their first Bitcoin. And I want to be buying it when they're all panicking and getting out at the same time. These are good moments.
And you can tell someone is inexperienced because of the UTXO model. Am I right in saying that?
Yeah, so we generally use what we call cohorts. Probably the simplest one to look at is long-term holders, short-term holders. We use about a 5-month holding time. Statistically speaking, coins that have been held for 5 months stay held. They're much more likely to stay that way, except during bull markets. They get bought, stuck in a wallet, held 6 months, 12 months, 24 months. Bull market finally arrives. We get to new all-time high. Some of those coins come back to life. So that's the sell side that actually oversaturates a bull. So yeah, we can basically look at it based on holding time. There's a bunch of other heuristics, whales and shrimps and how many coins you've got. There's all sorts of stuff, but they're the simplest ones to get your head around.
Now, question about check on chain. What is it and how does it help, let's say, traders and investors in the cryptocurrency space? And does check on chain also offer frameworks for making, let's say, data driven decisions?
Yeah, so Check on Chain is my own project. So as it stands at the moment, I spend part of my time with Glassnode, and more recently I've started moving to doing more time on Check on Chain. So it's been around. I mean, it was basically the website that you see it's not very good. It's handwritten HTML by myself, but this was the original project that I started building when I was an engineer. So Check on Chain is actually where I came from, and I'm now going back to work for myself more full time. So that's my kind of full-time role at the moment with a Substack and all the rest of it. But the purpose of that is really it's a tool for me, and
Yeah.
it was my excuse to learn Python. It was my excuse to learn on-chain data. It's kind of how I got good at studying this stuff. It's why I became fascinated with it. And in many ways, what I'm trying to do there is explore things from my lens, right? So as you can probably imagine, I've worked for somebody else my whole life. Check on Chain is the first time that I worked for me, and kind of taking all these skills and all these things that I've learned over the years and all the stuff that we built at Glassnode, and really just reframing it in a way, because there's a difference between when you're working for yourself and with different businesses. They've got different business models, different clients, all that kind of thing. In many ways, I'm showing off how on-chain data can work the way
Yeah.
that I use it. And then, people who are using Glassnode tools, I mean, if you actually want the data and you want to trade this stuff and you need API, Check on Chain will never deal in any of that kind of thing. That's where Glassnode is your kind of your
Okay.
perfect data partner. What Check on Chain is all about is more the mechanics, right? What is my perspective as an analyst studying these markets, and what do I think about it personally? And then Glassnode is then there for the actual data usage. If you really want to get in there and trade it and take the ideas that I discuss, but turn them into a systematic model or trade them or discretionary, whatever else, that's where these two kind of work really, really nicely hand in hand.
Now, regarding check on chain, if you go to the website and if you click the Bitcoin white paper, it takes you to a really interesting domain name. So, can you tell our listeners the reasoning behind that domain name?
Yeah. So it's actually not my domain. I actually don't know
Okay.
who hosts that, but if I'm not mistaken, the website, the URL is something like craigwritersnotsatoshi.com or something
Yeah.
like that. Now, I can't actually remember. I think it would have been when Craig Wright, who is unfortunately an Australian, and he's an
Yeah.
embarrassment to the country. This is the bloke who was trying to pretend that he was Satoshi for a long time. Now, there was a phase when he started suing people, I believe, for
Peter
hosting the white
McCormack.
paper.
Yeah. Oh, even
Yeah,
yeah.
and Pete McCormack and Hodlnaut. And so anyway, as part of that whole I can't remember when that was, 2019 maybe. As part of that whole process, everyone started adding the white paper to their website. Now, as part of that whole thing, I found this very interesting website called craigwritersnotsatoshi.com, which hosted the white paper. I was like, well, that to me feels like the perfect URL to just put as a backlink to you. If you do want to read the white paper, that's probably a good website to get it from.
That's absolutely interesting. Now, James, in your check on chain, you've recently been posting quite a lot of YouTube videos, isn't it? So, what is it that listeners can get from check on chain YouTube channel?
Yeah, so much of the work that I've done over the years has been video, and
Mhm.
some people like to read, some people like to watch and learn kind of more visually. So basically, we've got a YouTube channel, which is at Check on Chain. We've also got a Substack, which is at checkonchain.com. And these two are basically two different strategies for, some people like to read, some people like to watch, some people like both. And we use both of those different elements to just help people understand what's going on and kind of sharing our perspective. So, I mean, I love studying this stuff. And my big picture thesis is that we mentioned all the jargon and all the weird and wonderful stuff that goes on in this industry and this discipline. In many ways, a lot of traders just simply, or a lot of investors just don't have the time to study it. There will be some guys who are actually going to run quant strategies and systematic models, and that's a kind of a different bucket. But there's some people who are just kind of casual observers, and they're just kind of curious what their investment's doing. They're not interested in buying, big data packages, and they don't know what to do with it all. Some people just want to be told a bedtime story about what's actually going on, right? They want to
Yeah.
understand what's Bitcoin doing under the hood. And essentially, that's where I've specialized. So it's more a way for me to package up my expertise and provide it. And also, I just love to write. I love writing, and I love giving people like my insights. So it's a way for me to do what I love to do, and also have a business model behind it where people who also enjoy what I do can essentially it's a mutually beneficial setup.
What I'll do is, in the show notes, I'll definitely go ahead and mention, your Substack channel and the YouTube channel as well. Now, regarding Glassnodes, I do want to find out, are there any clients, who've been benefited by Glassnode's data and they've gone ahead and made any informed decision? And because of Glassnode's data, they've gotten a competitive edge. Can you name any clients or examples how it has helped them?
I certainly can't name clients, but what I can say is, if you were to see the client list, it's funny because there's many clients there where you kind of look at some of the institutions, and you'll say what they're saying in public, and then you'll see what they're doing in private, and they're kind of two different sides of the equation. So, in many ways, I think the Glassnode client list is it's quite impressive. And many of them, we have me and my analysts and our team, we have regular conversations with these guys. And a lot of them, they do get a stack of value, particularly in that API, quant, systematic, because there's so many good ideas. And in many ways, that's why we built and shipped the data that we were talking about before, because we keep hearing this feedback that these are the types of metrics me and my guys are studying and going, yeah, we agree. And then we kind of go, okay, well, here's the client demand. Here's what we also think from our expertise. Let's merge those two together and ship a product that's really going to just take the market by storm. So that's what these new breakdown metrics are all about.
Now, last year, I interviewed James Butterfield, who's the head of CoinShares, or head of research for CoinShares. And I asked him, what advice you'd like to give to institutional investors. And this was before the spot Bitcoin ETF. And he did actually state that it makes sense for them to put, let's say, as much as 4% into their funds into Bitcoin. Do you agree with the assessment, or do you have any different opinion or advice to, let's say, high net worth or institutional investors?
Yeah, I do. So 4%. If people looked at my portfolio and they were thinking 4%, they're probably they're going to have a heart attack. It's probably a bit higher than 4%.
Yeah.
Nevertheless, when we look at, and actually this is part of the report that we did with Coinbase the other day. One of the sections is looking at portfolio performance, and there's been many studies that have done very similar. I think Galaxy Digital did a really good one. The biggest difference to a portfolio is when you go from a 0% allocation to a non-zero allocation. So when you add Bitcoin into your portfolio, it improves all of your performance metrics. Your drawdowns, even though it's a volatile asset, strangely enough, your drawdowns can actually reduce because it's got very strong upside performance. It's volatile to the upside. If you look at things from like Sharpe ratio, Sortino ratio, Kalmar ratio, anything that's like a traditional finance measuring stick for risk-adjusted returns, adding Bitcoin to your portfolio, we tested 1%, 2, up to 5, it improves your portfolio's performance. And this is largely because it has very strong upside. And even though there is downside, it's usually over like a 1 year out of 4. It trades lower. So generally speaking, having an allocation for high net worth individuals, particularly as we enter this world, and probably don't have time to go into the whole macro side, but to me, my core thesis right now is that they will be printing a lot of money in every country for many years to come. And as a result, Bitcoin and gold are really the only two assets that are neutral reserve assets that can protect you from that. There's very few other assets that I think have that level of liquidity. And, even just at a very simple level, Bitcoin is one of few assets that has an exchange rate in every fiat currency. Every country you go into, you'll be able to buy US dollars, gold, Bitcoin. I can't name any other asset that would be true. I can't use my Australian dollars in Dubai, right? But I could probably use Australian dollars to buy dollars, Bitcoin, or gold anywhere. So that's, for an asset that's only 15 years old, that's pretty remarkable to have kind of elevated itself to that level. So I think Bitcoin, an allocation for particularly for high net worth individuals who can weather the volatility if it does trade lower, to me, it makes all the sense in the world, particularly given the macro backdrop we're in.
Now, in Dubai, you can definitely go out and buy groceries. There's, a massive chain called Day-to-Day Care. They have started accepting Bitcoin and quite a lot of other meme coins and shit coins as well. And you can buy properties as well. And, I've invested in a property in Dubai. Now, I'm not sure if you know, James, that the oldest cryptocurrency exchange is actually from Dubai, not Kraken. Because if you actually look at the inception date, there's a cryptocurrency exchange which actually got the license just 2 weeks before Kraken got the license. So,
is that right?
A lot of people don't know about that. Now, what I want to ask is regarding Glassnodes. What are some of the future developments or advancements that Glassnode is working towards? And keeping in mind, you have artificial intelligence, which is getting a lot of mainstream attention as well, isn't it?
Yeah, exactly. So, I mean, we've certainly done our experimentation with AI. In terms of like obviously writing code and stuff, it's very good. I certainly had a couple of aha moments recently where I just found that like I can ask it a question, it will just write code for me, and it actually
Yeah,
improves my coding ability. We're some distance away from it being able to reason about markets. So at the moment, in terms of like how it's actually doing work within the data sets, not very to a very high extent. I think there's probably a couple of years until we start going down that path. Um, in terms of developments, I think these breakdowns are really, really exciting. So we're going to be bringing that not only to Bitcoin, but also to Ethereum and ERC20 tokens as well. I think there's a lot of work that we can do on stable coins, looking
yeah,
at things in terms of jurisdictions, geographical, what time of day are people moving it around? Because as you mentioned, Tron is, Tether on Tron, it's like 60% of all dollar value moving around the system on any day. And that's increasingly not just like cryptocurrency trading, that's people using it as money. So you've
yeah.
got this like actual economy that you now have to start studying. So I think there's so much work to do on stable coins. I think with Bitcoin and Ethereum and tokens, more of these breakdown metrics to really get in the weeds and find out what those profit and loss components are will be super valuable moving forward. So yeah, look, there's a lot of great stuff coming on. Even just tracking and cleaning up data, like with these ETFs. Do we have to now? Got to do some research. Do you have to factor in ETFs, factor them out? I got a lot of people saying like, "Oh, you can't look at long-term holder spending because it's GBTC." And I said, "Well, but GBTC is basically selling. So does it
Yeah.
matter if it's?" I don't remember the last time I bought Bitcoin and I asked the seller, "Oh, by the way, are you bankrupt? Like, are you some kind of a state who needs to exit?" You don't care. One sold Bitcoin is one sold Bitcoin. So there's a level of does it matter? But then we also have to do the work to prove like does it matter, right? And filter things accordingly. So there's a lot of stuff there. And as you mentioned, it's a very dynamic industry. It's always changing. So it keeps us on our toes, that's for sure.
It's going to be really interesting to see, what the analysis regarding Glassnodes is, because Ripple is also planning to get into stable coins. I'm not sure if you know Federa Hashgraph. They're also working on stable coins. So, a lot
Yeah,
of
and that's the other thing. They're hosted on many chains, so you've
yeah.
got to track layer twos and all this kind of stuff. DeFi, it's crazy. It keeps evolving.
And just in token for the 2049, there was this announcement of Tether USDT to be available on Dawn blockchain as well, the one which runs on
Oh
Telegram.
yes,
So that was a massive event
which
as
is
well.
massive because Telegram is one of the most widely used social media apps. So it's like this
Absolutely,
stuff
yeah.
is it's just expanding like crazy. It's wild.
Now, regarding artificial intelligence, and this is more of a question towards you, the NVIDIA CEO that is Jensen Huang, he was at in Dubai, the World Government Summit. He actually said that you don't need to learn codes anymore. And all of the analysis work, like the analyst work that you do, and all of the coding work will actually be done by artificial intelligence. And he actually said you don't have to wait even for next year. What are your thoughts when the CEO of NVIDIA says a statement like this? Because historically in the past, he's always said that, you need to learn codes. But now he's actually saying that you don't need to learn codes. All of your work will be done, let's say, by the implications of artificial intelligence. What are your thoughts on that?
Yeah. So my general take is that everybody is currently producing content and analysis using AI, but nobody wants to consume content and analysis produced by AI because there's nothing creative about it. So part of the reason why Check on Chain is I'm kind of bringing it to life is because I love writing and I love analyzing. And in many ways, it's the human creativity. Personally, for me, I'm actually very bearish on AI ever impacting that kind of thing because for the most part, there's kind of two things that I anchor on. The first thing, if I knew it was AI that was writing the reports that I was reading, I would probably end up losing interest and stop reading them because I pay and I am interested in hearing from people that I trust who have done the work. And what humans do better than machines always will is think laterally. We connect our life. Here's a good example. When I was in Turkey late last year, we I pulled out like $200 in lira from the ATM, and it's this like wad of cash this thick. I can't even put it in my back pocket. My wallet's exploding. And I walked into one of the museums, and they've got all these old coins. It was called like the Hall of Currency or something like that. And there was all these old Roman and Byzantine coins, and they're brass and silver and gold. And I was looking at these things. I mean, like, these are 2,500-year-old coins, and they are worth more than the money in my back pocket that I just withdrew from the ATM that I can't even fit in my pocket. Those human experiences, you can translate that. That's like your lived experience. An AI doesn't have that, and it will never have that. So you can take those human experiences and those things that you go, oh, you can connect dots. Machines will never be able to do this. So I think in terms of content, that side of it, I think, will always be human dominated. And I challenge AI to even come close to being as creative as a human. And the other one is that markets are a bit of a force of nature, in the sense that there is no ATM, there's no secret code. Otherwise, you just trade it and be $1 billion overnight and you walk away. So I don't, if everyone's equipped with AI, then AI has no value, because essentially it's going to be, someone's got to be losing at the table, and it's going to be AI, which means, well, AI is going to be just, so in that regard, I still think that level of human creativity, I think where it would make sense for a CEO of NVIDIA to be like, yes, AI, you know, you want to buy these chips because he's supporting this industry. But for the most part, I'm actually not that bullish on AI, because I think the human brain is what makes the world an interesting place. So that's kind of my big picture takeaway from that.
Now I'm going to put you on the spot, James. What I'm going to do is, I've used ChatGPT 4, and I put the transcripts from some of your podcasts. I put the questions that I prepared, and I asked AI to come up with a question. So the next question that I'm going to read out is directly from GPT-4, and let me know what the answer to this is.
Nice.
I'll try to read it verbatim. So the question is, James, in the digital age, where algorithms increasingly shape our decision and perceptions, how do we ensure that human values and ethics remains at the forefront of technological progress, particularly in the field of Bitcoin and data analytics?
Interesting. Could you just read back one more time?
Yeah, sure. In the digital age, where algorithms increasingly shape our decision and perceptions, how do we ensure that human values and ethics remain at the forefront of technological progress, particularly in the field like Bitcoin and data analytics?
It's kind of gluing together two completely somewhat disparate ideas. But there's kind of a philosophical route, right? Which in the world of Bitcoin, if we believe, as I do, that it's a sound money alternative, improving the situation of inflationary fiat currency to a sound hard money, I think if we can run this experiment, and I think it will improve people's life over the long term. So I think just moving more towards a sound money, even if it's just to protect yourself personally, it doesn't have to be adopted at a national level. It's just, for me, I live not perfectly on a Bitcoin standard, but like I think in Bitcoin terms. And I think that has changed who I am as a person. It's made me probably a better long-term planner. It's improved a lot of things. So I think Bitcoin is a bit of a natural forcing function for that. I don't know how it's going to affect the ethics of data analysis. It's probably but no question, right? The algorithm side of the equation, and we're probably going to see some interesting snapshots of this, and I won't get political, but, we've got a US election coming up in a world of AI, deep fakes, some pretty, probably less than ideal candidates on both sides. We're going to see what this looks like in the very near term. I have no idea what it looks like. All I know is it's going to be chaotic and messy. And, human beings, if you believe we're in some kind of like a fourth turning, or we're going through some turmoil, I'm one who would never bet or fade humanity. I think we're a creative bunch. I think we'll come up with solutions. It may be turbulent in the near term, but I wouldn't be betting against humanity of overcoming these problems over the long term. So that's my general view.
That's like the Terminator movie as well, isn't it?
Yeah, it is.
I'm liking the answer. Now, you touched base about the US election, and the next question is, I do have very specific 3 questions rather. The first one is regarding the Bitcoin halving. The second one is regarding Ethereum ETF. And the third one is regarding US elections. Let's start with the Bitcoin halving. Now, let's take a step back before the Bitcoin halving. Now, the Bitcoin halving usually is a one token show, but this year, they shared the stage with, let's say, runes and even ordinal inscriptions. Now, what were some of the on-chain data or expectations that Glassnode was paying attention to prior to the Bitcoin halving?
Yeah, so the expectation was that there was probably two things that I was keeping an eye on. The first one is that I knew that there'd be a lot of fees because these rune things, right? We've seen ordinals kind of emerge in 2023. Sometimes they were consuming 50, 60 odd % of block space demand. We knew that there would be a big uptick, and actually they've faded away as probably about as quick as I thought they would.
Yeah.
They kind of came and went. I haven't seen too much sustained activity there. They may come back in waves, but generally speaking, I don't pay too much attention to them aside from just paying attention to the fees. And the other one was whether you agree with ordinals or not, there was a risk that halving block, there was a bunch of things in there. The first runes went live, and who knows what they were going to be worth. There was the epic sat, as they call it, which is like the first sat within ordinal theory, the first sat of a halving block. And every 4 years, the halving block is also a difficulty adjustment. That doesn't happen every halving. So technically, it was one of these special circumstances where it's both a halving and the first one since ordinal theory was invented and a difficulty adjustment. There was a risk that mining pools let's say a small mining pool won it. They got 5% of the hash rate. And there's another couple who have like combined 50, 60%. They could technically reorg the chain and squeeze out that little 5% miner. Now, we didn't see this happen, but there was a risk for that to happen. So I was paying attention to those. Runes faded away more or less as expected, and we didn't get a reorg. So by and large, about as seamless as a halving could go.
Yeah, regarding runes, the podcast that I'm going to be releasing later on today, I'm actually talking about how 68% of the runes have kind of disappeared already by now.
Doesn't surprise me.
Now, yeah, regarding the halving, based on your on-chain analysis, are there any commonalities between, let's say, the 2020 halving and 2024 halving? Are there anything that is common between those halvings?
Less so common in the halving sense, more so. So there was a big narrative about, Bitcoin has never all-time high before the halving. I don't really put too much stock in that as an important date. However, what I do look at is what happens when we break to new all-time highs. And the current break to new all-time highs is almost textbook perfect, exactly the same as the December 2021. And back in, it would have been like late 2016, early 2017 when we broke through the $1,400. Both of those, it looks exactly the same on so many metrics. So to many kind of tools, the human behavior, right? People keep saying on-chain snake oil and it doesn't work. It's like, well, people keep doing the same thing cycle after cycle. We keep seeing it. So like until that model changes, I'm going to expect it to continue.
Now, James, I had this very specific question regarding this halving. Am I right in saying that based on the UTX model, it was the miners who immediately sold after the Bitcoin halving, that is after the 20th on 21st? Am I right in saying that, or am I miserably wrong?
I actually haven't looked, so I can't give you an answer to that one. I'd have to go and poke around the data. Glassnode will have that data, but I haven't looked at it specifically.
Now, let's talk about runes. What are your thoughts on fungible tokens on the Bitcoin blockchain? Now, this is keeping in mind, your definition of Bitcoin and the concept of being sound money. What are your thoughts about runes and ordinal inscriptions?
Yeah, so I've got a few different takes on it. Some people think that I'm pro ordinals. I'm kind of neither pro nor against. I think that just is. I think there's a few observations I've taken away from it. The first thing is that it's been, without a shadow of a doubt, and I would say inarguably so, a forcing function for some pretty weird developments. We've seen, whether they get there or not, it's kind of irrelevant. We've seen people experimenting with layer 2s. We've seen people experimenting with different ways to hash and implement data. I mean, they've built DEXs that use partially signed Bitcoin transactions. All this, like, just people are interested in writing stuff with Bitcoin script again. That's a good thing. The second thing, which I find quite interesting, is that ordinals, all it's really doing is using Bitcoin for what it is, which is a reference point. It's an anchor for who owned what and when. Now, yes, people may be sending transactions which are different and non-standard and all that kind of thing, but the nodes accept it. It's, technically you've been able to inscribe stuff since Satoshi wrote the software. There's a lot of people who are very against it and want to filter it. When I have kind of run the mental simulations of what that looks like, I don't think it's ever going to be effective, because if you've got miners who are incentivized to do it financially and people who want to send rune transactions and whatever, they're all going to run software that doesn't filter it. So I think it's going to be very ineffective overall. So if I kind of just think about it and just take a real big step back, I don't have a great deal of time for ordinals and inscriptions. I get it. When my dog passed away about 4 months ago, I inscribed a picture of him, so he's there forever. So now he's on every blockchain, every Bitcoin node in the world. That's like, to me, that's a novelty, and it's graffiti, right? At the end of the day, I think they're graffiti. Now, most graffiti, like most analysts are shit. Most graffiti is not very good, but some of it is kind of interesting, right? So graffiti is something that goes back as far as humans go, right? We've been graffitiing stuff since the Romans on toilets and all sorts of things. So in many ways, it doesn't surprise me that people are putting graffiti on Bitcoin. I don't view it as the most like, it's so sacred that thou shalt never put an inscription on the chain. To me, it's a record of human history, and it comes with all the blemishes, all the weirdness, all the stuff that humans do. To me, it's just very human, and I don't think we can do much to stop it. So we just kind of move on and press on.
Totally agree, and that's one of the reasons why Taproot and Snow Signature was implemented as well. Now, Bitcoin maximalists, they are divided. Some of them love it, some of them they hate it, but at the same time, some of them are like you, they don't care. It is what it is. But what about Ethereum? The next question what I wanted to ask is, on the 23rd of May, we find out if an Ethereum ETF is approved or not. And Glassnode's Weekly Insight actually covers Ethereum as well, isn't it? So have you noticed any changes, let's say, so far as Ethereum is concerned? Because last few weeks, the SEC is going after Ethereum Foundation. So regarding Ethereum, are there any on-chain metrics that is really interesting that you'd like to share with listeners?
So with the Ethereum's obviously had a bit of a challenging bull market. It hasn't quite performed the same way as other chains have. I've got a relatively nuanced take on why this may be. Generally speaking, when I look at Ethereum, and I've been critical of it in the past, I think the project by and large made some, let's call them long-term mistakes. I think they tried to compete with Bitcoin as money. And I think when you're a smart contract blockchain, you've got one of two choices. You can either be gas for your transactions, or which benefits users, or you can try and be a monetary asset. And if you're a monetary asset, naturally you want price and things to be more expensive, and as a result, you're going to price out users. Right now, this is not saying the blockchains scale; they don't scale at all, which is kind of a reference point, which is why Bitcoin has made the trade-offs to be money. But the problem is that Ethereum made the trade-offs to be a smart contract platform for its users and build all these DeFi applications. But then it decided to pivot and implemented burn mechanisms and started trying to be sound money, and that didn't quite play out as planned. And now they're in a very unfortunate position, in my opinion. They're not Bitcoin, so that's the first thing. So they kind of lost the war on smart money, on being sound money. But what they also, in their time trying to be sound money, they forgot to build solutions that actually make it a usable chain. I mean, I don't remember the last time I used Ethereum. It's years ago at this point. And I know a lot of people who are the same. And what they forgot to do is they were too busy fighting the guy that they were never going to win, that they forgot that there's a bunch of little guys over here who are doing more work, faster, cheaper, smarter. They forgot they've got competition on this side. And then they went to proof of stake. And now that they're proof of stake, they don't really, all they have is technical debt. They don't really have that many advantages. And we've seen the emergence of Solana. And again, I don't have an opinion on Solana. But what we've seen is that Ethereum is now competing with two different fronts. And it's not the best at either of them. So, and then, they've gone down the path of layer twos. I mean, if you've tried to use a layer 2, congratulations, because it's a really, really brutal user experience. It's a nightmare. And unfortunately, guys, it's just not going to happen, right? So until that is solved, and that's 5 years away minimum, and I just don't think Ethereum's in a very competitive situation. So I think that explains in many ways, not really on-chain, but from a philosophical and mechanical standpoint, I don't know where Ethereum gets any kind of adoption from here on. I think it's in trouble. And I think the price is telling us that overall. It's kind of in a bit of a valley where it's not Bitcoin, but it's also not any of the other competitors. So it's like, what is it? Well, it's kind of there to be flipped, in my opinion.
Now, regarding Solana, I very specifically remember, the founder, that is Anatoly Yakovenko. In CNBC, he said something on the lines that if Bitcoin needs to be relevant, it needs to go and do quite more things. And after that, Solana has stopped producing blocks for well over 12 locations. So, I think it is a centralized blockchain. Now, you mentioned about
Yeah, me
Ethereum.
too.
I did actually do a survey via LinkedIn, and I asked specifically CTOs who are building things in the so-called Web3 space, are they using any decentralized apps? And out of 61, only one person actually said that they're actually using a decentralized apps. I was like, see, you're not using a decentralized app, and you're someone who's trying to build it. You said 5 years. I don't think so. It's going to happen even in a decade's time.
No.
The only thing that probably might help Ethereum is, the tokenized fund, which BlackRock is doing, and they are focusing on tokenization. So that might probably pump up the price of Ethereum. And interestingly, he said that it doesn't matter if an Ethereum is a security or not. He is still going ahead with an Ethereum ETF. So it's going to be really interesting to see how that thing plays out. Now, the next question that we briefly touched base is regarding the US election and the drama around that. So are there any metrics that Glassnode is looking at, keeping in mind the US election as well?
Well, none specifically related to the election, but I just think that generally speaking, I would put that in the bucket of it's going to be a tumultuous year for politics,
Yeah.
and generally speaking, if people were asking me like what my view was on monetary and central banks and all that stuff, and towards the back end of I can't remember if it was 2022 or 23, I basically said I think the age of the central banker is over. And we're moving into the age of the politician. And I would say that that's probably now the case. And the thing with politics is that it's unpredictable. It is so unpredictable. Decisions get made that you just come out of left field and markets respond accordingly. So my take on this from a data-driven perspective, I believe that anybody who's interfacing with Bitcoin, let's say, for example, you've got a bunch of investors and they're actually concerned about the result of the election and they think it's going to be bearish for Bitcoin. You're going to see them start moving their coins and doing stuff on Bitcoin. So if they're not doing that, then that's also information. So in many ways, if somebody was going to express their opinion about the election via Bitcoin, we're probably going to see it play out inside Bitcoin because there'll be many people who are going to have the same opinion, right? Because humans move in packs. So by that regard, on-chain data is actually fantastic for tracking this. If you understand what the mechanics are, you can see the whole market doing whatever they're doing. So, not to get bogged down in the actual weeds of the result, doesn't really matter. I'm going to see what Bitcoin is telling me about Bitcoin because that's where all the information is.
Yeah, regarding US elections, the only thing I can say is they have something called as mask indicator or mask index. What that actually says, and bizarrely, it's turned out to be really accurate, the number of masks that are actually sold during Halloween. That does
Oh,
very
interesting.
accurately, yeah, that does very accurately predict, who the president is. And initially I just dismissed it. I thought, there's just some weird matrix, but there is some really strong legitimacy to it. So,
Go
only
figure.
time will tell, I guess. Now we are almost done, James, with our podcasting session. Really, thank you for this. Now I just have to ask you another question. That is your favorite genre of music.
Punk. Actually,
Oh,
I'm a big fan of like the Clash and the Damned and Rancid. Yeah, punk has always been my kind of go-to when I'm just not really sure what I'm feeling. That's usually my gets me riled back up again.
you could say Rage Against the Machine is kind of like punk as well, isn't it?
Yeah, I mean, Rage is it's a fantastic. I mean, they're just absolute bangers left, right, and center. But if I had to go favorite artists, it's probably the Clash because they really experimented with so many different
Yeah.
ideas. Every single album is completely unique and different. They've got that real gritty London sound, but also very creative.
That's absolutely wicked. Thank you so very much, James. And as we wrap up, is there anything else you'd like to share with the audience? Whether, let's say, it's about your journey, let's say it's about Check on Chain, or any upcoming partnership or events that you are excited about regarding Glassnodes.
Yeah, I mean, I think definitely for Glassnode, check out the new breakdown metrics, particularly if you're trading via API and you're looking at systematic approaches. Really, I mean, Glassnode has the best data when it comes to this. Granular, it's stable, super high quality stuff, and really, it's the result of many years of myself, my team, our data scientists really coming together and working out what drives markets. Check on Chain is essentially my way of expressing how I view that market, right, and turning that into information for people to kind of read and watch. And yeah, I think Bitcoin's in a really interesting position. I think it's just so well positioned for the world that's ahead of us. And it's maybe 4% allocation could be a bit on the low side.
Absolutely right, James. Thank you so much, James, for doing this. Really, really appreciate it, James.
Good on you, mate. It's been a pleasure. Thanks a lot.
Thanks. Have a nice.